So we're going to discuss the micro extreme indicator that the binary dashboard team has engineered over the last 2 months. In short, we just call it the MXI for simplicity. Before we proceed, kindly observe this disclaimer and also risk warning. All right. So the agenda for today is to discuss what exactly the MXI is, how exactly you as a trader in Blue Sky Binary or a trader that is using the dashboard at a broker can use it to your advantage. Also, we'll give you some tips that can enhance your ITM or win rate with this indicator, and also then some key do's and don'ts. It's very important to stress at this stage that indicator-based trading has its merits, but only to a certain degree. Right? So the more you understand about the market, the better you'll be able to use the indicator. The indicator is using linear logic. The markets are not using linear logic. All right, so a few caveats there, and then at the end we'll have a Q&A as always, where you have the opportunity to ask us questions about the indicator or any concerns that you may have in your usage of the binary dashboard. So the micro extreme indicator, also known as the MXI, is an extreme reversal indicator found on your binary dashboard. It finds short-term reversal opportunities in the markets that can last between 5 to 30 minutes. While traditional indicators such as the RSI may give false readings of overbought or oversold prices, the MXI is typically around 10 to 20 pips smarter, which means it gives you a 10 to 20 pips better price than a traditional RSI or similar oscillator like a stochastic may. Right? It basically attempts to find short-term or near-term tops and bottoms. Note that the MXI is not flawless and will give false indications just like the RSI, so some practice is required to get used to it. Okay. So this is how the MXI typically will look on a 1-minute chart. All right, so when the MXI fires on any particular pair, feel free to pull up the 1-minute chart for that pair. And you can add Bollingers. We always suggest to have Bollinger Bands. You don't necessarily need them when you're trading this indicator, but we do suggest that you have them, right? And immediately you'll see a few interesting things, okay? Firstly, the MXI will skip the initial or a sharp drop, right? So to a certain degree, it is news adjusted, right? It won't just fire like crazy when news has happened. And the second point is that if you look at the RSI reading on this chart, the relative strength index reading, and you know RSI theory states that when the price is below 30, typically it may face some mean reversion. It may bounce up, opening up an opportunity for you to take a call or a long position. And vice versa, if the RSI is at 70, it may face some exhaustion, some retracement, and it may drop temporarily, and that will allow you to take a short or a put. Unfortunately, that doesn't always hold in the long run. For those of you that have used RSI, it's not a really reliable indicator, right? The price can remain overbought and oversold for hours. So the thing to note is that while the RSI here on this chart would have fired already somewhere around here, right, being oversold, the MXI didn't actually fire until a few minutes later, fighting the bottom. And this was live. This is from last week's binary dashboard GBP-CHF call at around 16 p.m. UK time or 15 p.m. GMT. All right, so roughly when the London market closed, you'll see that the MXI indicator fired right around here where you see the icon at a price of 1.31356. Now, had you opened a call trade, a call meaning you taking the trade believing that it's going to rise, the price is going to rise. Over the next 5 minutes, it would have been a turbo winner. Also, a 10-minute trade would have resulted in a win, a 20-minute trade, and a 30-minute trade, right? So it's a relatively robust indicator when it gets it right. And note that when the MXI fires, after you pull up your chart, it'll be pretty obvious to you in which direction you should consider opening a trade, right? If the price has dropped a lot, the RSI is a mean reversal indicator, which means that you're going to be looking to open a call position, all right? Now, this is in its very simplicity, and you can use it like this. Okay, it's a pretty powerful indicator. Again, as stated, it's better than RSI. All right, but let's discuss a little bit about how to refine that, how you can actually get the best out of the indicator. And before I do that, a quick word on capital allocation. All right, this is not investment advice, but I think it's important for those of you that understand splitting or segregation of your capital per trade. It may come into use here. So the capital allocation typically for this should be anywhere from 0.1 to 1% of your account when the trade is fired, right? And you shouldn't be placing 3%, 5% of your account unless you have really small accounts, right? So if you have a $100 account or $150 account, it's difficult for you to go for 0.1% risk, right? Or 1% risk. Rarely any broker will offer such a small trade size allocation, right? So obviously, this 0.1 to 1% recommendation is to be used depending on your own situation, depending on the size of your account, etc. But we would always suggest as your account grows, as it's larger, let's say if it's sizable, if it's a few $1,000s, because the MXI is a voluminous indicator, it fires very often during the day. That's the good news. You'll get up to 15, often sometimes 30 opportunities in the day, right? Almost 2 per hour. And it's also firing across the clock, across all time zones. The key thing is that you want to get the best ones. And for each particular trade that you do take, just allocate a very small percentage of your capital, right? Now, what you could do is either allocate the entire portion of your capital, which means, for example, if you're taking a 0.5% trade, right? So 0.5% of your capital, you could allocate it at the initial price at where the MXI fires. Or in certain instances, the MXI will fire on the same pair again, okay? And when this happens, for example, in this case, this is GBP-AUD the same day. This was in the morning, by the way. Again, on the 1 minute chart, the MXI fired here, right? And then around 10 minutes later, it fired around 20 pips higher, right? So had you taken this trade as a short or a put, depending on your expiry, let's say you're taking a 5-minute expiry, then you would have probably lost that trade, right? However, had you taken at the second MXI, which fired on the same pair just a few minutes later, you would have probably won all expiries, right? So you have two options. The first option is, as I said, the MXI is voluminous, so it fires quite frequently during the day. You could just, when the MXI fires, use that more as a prepare alert and say, okay, this pair is facing some exhaustion, either to the buy side or to the sell side, and I'm just going to wait for the subsequent fire, right? So after this fire, I'm just not going to trade this one. I'm just going to wait for the next one and place my original allotment. Maybe 0.1% or 1% of your equity or 0.5%, that's up to you, right? The other option is to actually participate in both trades, right? The other option is to say, okay, instead of me placing 1% of my capital on the original indication, the original MXI at this price, I'm going to split. I'm going to basically say that I'm going to place 0.3 at this price, right? 0.3%, and the remainder, 0.7%, remember 0.3 plus 0.7 is 1%, and the remainder at a better price at the second MXI indication. Now, if you go long duration, in the sense that you're not trading turbos, you can trade turbos with MXIs, but we've said that it works anywhere from 5 to 30 minutes. Let's say you took this trade for a 20-minute expiry and this one for a 20-minute expiry. In this case, you would win the 0.3% trade as well and the 0.7%. Slightly later though, right? The second one has the same expiry, but it was taken a bit later. Net, you would be ITM on both these trades, and you just got a better average in price. That's the whole point of splitting, right? In this case, you didn't allocate your entire 1% at this price. You simply split it. You took a smaller trade here, 0.3% allocation and 0.7% allocation, resulting in a better average in price on this fade, right? You basically faded, or you played this micro retracement, all right? And I want to strictly state this here, that this is not martingaling, right? What we're not saying is you're putting 1% here, and then you're actually opening a new trade here, a new trade sequence, separate capital or more capital, and placing a 3% or 4% trade here, so that your total exposure is 5%. That is not suggested, right? We don't want you to martingale this. Because, why is that? In certain instances, and it's rare, but it happens, you may get a third MXI reading and even a fourth, right? We put together a beta group of users, and the feedback overall has been very positive on the indicator, right? That's why we're quite excited about it. But one thing to note is that the markets are not linear, and this indicator is linear. And in strange instances, you may just get 3 or 4 or 5 waves up, and you have 4 or 5 MXIs, and you don't want to be stuck in those trades. You don't want to be placing more and more capital, right? Because in the odd event that they all lose, you're going to take a big hit. So what you should basically say is that, okay, for any given MXI, I'm not going to place more than 1% of my account on the trade, right? And whatever that is, whatever that means in dollar terms. And then how you distribute that 1% over any trade sequence is up to you. 0.3, 0.7 for us is a combination, but there are, of course, other permutations as well. Okay. Now, the thing is that if you are not trading events like the Brexit, right, or events like non-farm payrolls and FOMC news, either in the US regarding interest rate policy, or the Bank of England with the British pound, or the European Central Bank with the euro, if you're trading around those periods, and we suggest you trade mean reversion around news. You don't trade it through news, because news basically creates a trending market, right? Creates powerful liquidity-driven price action. You want to stay away from that if you're trading mean reversion, which means you're trading on bounces, right? You're trading the bounces. Then it goes to say that you should be trading the MXI outside of news, right? There's no point if you see a major news event that's just happened or it's about to happen, and the price shoots up and the MXI fires. Why do you want to trade that, right? You're subjecting your portfolio to unnecessary risk. So what we would suggest is instead trade this in the quieter hours, right? Or just when you know when there's no major news, and you can get access to an economic calendar in your binary dashboard to tell you when the news is there. The reason behind this is the probability of a reversal is dramatically higher when there is no news. All right. Now, let's discuss some key tips on how you can actually improve your ITM. Okay, so here in this example, I basically showed you how you would possibly split over 2 MXI indications on a trade, right? Splitting your capital. Or you would be prudent and you would just skip the first one and trade the second one, because you see them on your dashboard, right? You see the secondary MXI on the same pair after a few minutes. It fires there. So you can take the strategy that I'll never trade the first one, I'll just trade the second one. Or you can split your capital over both, all right? But the third option is to actually do multi-time frame analysis, and that literally takes 5 seconds or less, right? So if an MXI fires, switch to the 5-minute chart. In this case, notice all our analysis has been pretty much contained or ring-fenced to 1-minute charts, right? That's what the RSI is for. That's what the MXI is for, sorry. But on the 5-minute chart, you may see this, okay? This is the same pair, GBP/AUD 5-minute chart at 9:50 in the morning. Remember, this was the second MXI reading, okay? Just to put things into perspective, 9:50, this was the second MXI reading. In this old chart, this is where you allocated 0.7% of your capital at the second MXI reading, right? 9:50. But now this is a 5-minute chart, the same pair, same time. And what you see here is that the price is decidedly outside the Bollinger Band. And on top of that, it's also hitting a RSI extremity. It's overbought, 71 to be precise, right? Now notice something. The first MXI reading, which I've not shown on this chart, was somewhere here, right? 10 minutes earlier. where RSI was not overbought, and the price was kind of creeping outside the Bollinger Bands, but not really decisively outside it, right? And just to show you on the 1 minute chart, this was the first reading, right? The MXI reading. So for those of you that are prudent, you don't want to engage in splitting, right? A quick check you can do is anytime any MXI fires, just fire up your 5 minute chart and see where the price is relative to Bollinger Bands and the RSI. Okay. For those of you that understand support and resistance level trading, and those of you that understand the importance of whole numbers, what we call in Blue Sky Binary psychological support or resistance levels, for example, 1.57000 or 1.3000 or 1.000. In this case, 1.89000. Do you see that here? That is exactly where the price topped out, because that is a psychological resistance level, PSI-RES as we call it. And the MXI fired at the same time, and you have on the 5 minute chart the price outside the upper Bollinger Band, and you have an RSI reading that is overbought. That is the perfect storm, and notice the strength of the retracement, right? That's a significant retracement right there, right? So for those of you that are using support and resistance levels to trade reversals, if you can correlate that with an MXI reading, right? For example, this is not near maybe a support resistance level, or maybe it is, depending on whatever you have in your MT4. This one definitely is. Then you're probably going to get a much better reversal. So these are some key do's and don'ts, all right? Do demo trade the MXI first. I want to reiterate, this is an advanced form of RSI. It has a few more filters. It takes into account quite a few more variables than just RSI. So it's a better indicator, and in theory can replace your RSI, right? One key tip I would give you is when the MXI fires on your dashboard, it shows a price. That's the price at which it fired, right? When you pull up your chart, make sure you get a better price, or at least the same price as that, right? It's not necessary. It doesn't mean it doesn't work. It just means you want to give yourselves the highest odds, the highest chances of winning that trade. So try and get the dash price or better. Thirdly, and very importantly, you have to use money management here as well, right? So if you have two losses in a row, then it could be that something about the markets today is very trendy. Be careful. Live to fight another day. Just stop trading, at least per day, or at least for the session. If the day is too long, then take a few hours off. A major don't is don't trade correlated, right? This is a big issue. So the MXI may fire on British Pound USD, also known as cable. It may fire on the British Pound Swiss franc. It may fire on the British Pound Australian dollar. If there's a move in the British Pound, it could trigger these extremities, triggering the MXI in certain instances. And when you see that, it doesn't mean that you open trades on all three, because then you are basically you are over proportionally taking on too much British Pound exposure in that case, right? You're just too geared. You have traded correlated. Now, if all three win, great. You have a big ITM in your account, a big equity growth. But if one loses, most likely others may lose as well, and that's a problem. So don't trade correlated. And then, as I said earlier, there's no need to trade during news; it's unnecessary. And never allocate more than 1% of your capital per trade. And that applies to sizable accounts. I'm talking about accounts that are sort of a few $1,000s big, right? But if you have small accounts like 100 to 300, 400, $500, then these rules you can possibly bend slightly, maybe to go to 2% or 3%. But what normally you are advised to do is to trade 5% or 10% of your account, and we are strictly against that, right? That is absolutely not sustainable long term. Okay, so that's it. It's time for Q&A. Feel free to ask any questions at this stage. Thank you. I see a question from Beksod Kasimov. Great question. Has MXI been backtested? And if so, what are the results of the backtest? So we're currently working on a backtest for about 3 years over 16 currency pairs. And we're looking at all the expiries, anywhere from 5 all the way to 30 minutes. And we are going to be creating a signal out of it for Signal Hive. That's all I can say at this stage. At this moment, it's too early to comment on the back-tested win rates or anything like that. We still need to go through all the pairs. David, good question. A follow-up question from David, similar to Bexod's, with regards to the win rates. Are you experiencing 70% success on these MXI trades? Based on the beta group's results, it seems to be a winning ratio, but again, we have no hard data to back that up with regards to 70% success rate. Mainly because people engage in splitting. They may take us higher capital allocation at a second MXI, etc. So there is no clean win rate data at the moment. I think our back tests will reveal possibly more when that's done. Yes, a question from Lois. I noticed there is a lag time when the signal is fired off the indicator. So we haven't really experienced this, Lois. I can see that you've experienced it. There's always, maybe 2 or 3 seconds delay, but I haven't seen sort of a significant lag time. What happens is sometimes the indicator will pick the top, and that top only lasts for a few milliseconds. And when it fires it, by the time it hits your dashboard, you already see a minutely red candle down. And that just means you've kind of, you've been at the wrong end of the stick here. The market just moved against you at that point. You can just wait till the price is retested and enter there. I think if the problem is kind of broad based, then we'll take a look. But at this moment, it's not something that we really gotten too much negative feedback on. Any further questions? See a question from Adetayo regarding the ITM. Yeah, again, this is an indicator, Adetayo, and we are doing some back tests on it to create a signal out of it for Signal Hive. We'll let you know more about the ITM when we have it. In the meantime, you can apply the analysis that we have showed you here and do it on a virtual account and see your results. Any last call for questions? A good question from Lois. Would you recommend if the indicator fires in the first 30 minutes, take it till 30 past, and it fires after the second half of the hour, take it end of hour? Yes, we would. That's a good strategy to split it that way, because you don't want to take on too much duration. You don't want to take on 40, 50 minutes trades if the indicator is fired early in the hour, right? So Ade, the indicator is already live on the dashboard. You can already start trading it. All right. In answer to your question, how soon it will be on Signal Hive, we'll need to see when the tests are ready, if and how we'll implement it on Signal Hive. But it probably will be a robotic signal. And we've seen something pretty interesting on certain pairs at certain times of the day, where it's actually a powerful indication for a price action trade, a trend trade, right? Specifically during news. So we may have something interesting here to create a first kind of news trading signal where it alerts you for trade in the direction of the news. But it's still only it's still early times. We're still running the test. In answer to Robert Cadeau's question, it's manual only at the moment. Yeah, it's 100% manual. Just go through this webinar again, go through our tips and tricks, pull out your virtual account and try and trade it. The beta group has had some pretty decent results with it. So you can see if it's something that you're able to master. It's by no means a holy grail or anything like that, but it's smarter than the RSI, and it gives you a 10 to 20 pip advantage over the RSI. And especially if you time it with nearby support and resistance levels, like we did here in this webinar, it can be a very powerful indicator, right? Probably one of the most powerful indicators um, that we have come across, and we've tested the entire gamut of them. Any questions? Any further questions? Last call for questions. All right, I see no further questions. So at this stage, I'm going to close the webinar, and I wish you a good trading week next week. Take care.